Hey everybody. So today I get a request to talk about inventors, how to deal with tax strategies, how to deal with your accounting, and we're going to go through a couple of those things, impromptu kind of video. That's the way I like to produce my content. Okay, I'm Mo, I'm CPA, I'm a tax strategist. I'm here to help you keep more of your hard-earned money while you're building a strong business. Anyway, so what are a couple of things that come up with an inventor? You have expenses, you want to optimize. Okay, first question always is, what kind of corporate structure should you be as an inventor? Should you be a sole proprietor, which means it's just you, your name, versus an LLC versus an S Corp? Maybe you should be a C Corp. How taxes differ between these structures, um, and when inventors maybe should make the switch from one entity to the other. Sometimes you can do that. So what would I say about that? I would say first starting out, you always want to have an LLC or another business entity that protects you from liabilities. You're inventing something. I always think about that movie. Um, I don't know the name of the movie, but the guy basically got sued because he made this chair, this like reclining chair, and then everyone like when they went to recline, they put their fingers in it, and everyone was losing their fingers. So the guy basically had a great idea. He was making tons of money, and then he lost it all because they got sued because people lost their fingers. That was a funny movie. I probably should bring that into my next video to talk about inventing and all the pitfalls there. But LLCs don't really do anything for you for taxes. They just protect you from liability. So don't be a sole proprietor if you're an inventor. It's a silly, dangerous idea. Okay. S corps and C corps have the same kind of liability situation. They're just a little bit more geared to being a actual entity versus an LLC could be single member, and you can kind of add partners. You can convert it to an S corp or C corp. Okay, what kind of deductions are deductible? What could you do? Are patents? What do you do with patents? What do you do with the prototype expenses? What are those? All the setup for your business. What can you take as a deduction? Just to let you know, patents, once you get those are intangible assets. You have to actually what they call amortize them over 15 years. Um, you can't just take the whole deduction. It's an asset. It's an intangible asset. So you have to be careful with that. You'll be taking that right off. The cost to get that patent will be amortized over a certain amount of time. Um, startup expenses. There's different rules with the IRS with startup expenses. You can only take $5,000 as the first year. Then you got to amortize that over startup expense. If it's under 50,000, there's a little. We're not going to go into too much detail on that, but you have to know that startup costs are not necessarily a deduction right there and then. You have to actually capitalize a lot of it. You have a little bit of a safe harbor to take the 5,000. Okay. Um, Common mistakes that leads to IRS issues. That's another topic. How to track expenses properly for maximum tax savings. Be organized. Get an Excel. If you have a lot of transactions, maybe get yourself a QuickBooks Online account. Just track your expenses. Those could be hard because you're an inventor. You have a mind, a creative mind. Creative minds are not good accountants, not good bookkeepers. They're just creative. They're all over the place. So try to, as much as you can, isolate. Maybe you only use one bank account, one credit card. At least you have everything there. When you start, going from wherever you had the cash at the time, it's sloppy. Yeah, you don't want to do that. So track your expenses, very important. Especially if you want to get investors, you want to get funding. What do you gotta look like you are a good investment. And if you're a sloppy Joe, that could be a problem. So be very careful, especially a lot of these inventors, there's a lot of startup costs. A lot of times you don't have the money. You need to get investors. And that also could, when we're talking about structuring your business, sometimes you get foreign investors or different kind of investors. and they're going to be shareholders. That's why sometimes you might need a C Corp because a C Corp can only have certain kind of shareholders. Maybe you've got a partnership, maybe an S Corp. It's a little bit, depending on what you're doing. And if you're serious about protecting your business and maximizing tax benefits, let's connect. In fact, call me. I like speaking to people. If you have a question, you call me. Have a great day.